Two trading opportunities to take a look at this week, so we're going to spend a little bit more time than usual on them and take you through my entire thought process. Let's start here on the Euro Dollar Daily, and as always, when I perform technical analysis, I want to start with my very consistent four-step process, IPDE: identify, predict, decide, execute. So the first thing I want to do is I want to identify what is price action doing, what has price action done. And for me, because I am structure based, I want to ask myself, where are we at relative to our most recent level of structure? So if I look at our most recent previous structure low right here, and I drag this line to the right, we are going to see that price a few days ago has broken and closed below that level. So identifying that price has violated that previous level of structure allows me to make the prediction that price is likely to go lower, and that's what sets up my directional bias for the trade. Now, looking left, I do see a few other lows here, so I just want to confirm that these lows are broken as well. That way we know that there's still room to trade this, and you can see, indeed, we did break and close. Now, the prediction process is a multiple step process. The first one is obviously making a directional prediction. Are we likely to go bullish? Are we likely to go bearish? We've already decided bearish. The next part, and this is going to be a little bit harder and a little bit more skillful, is if we're likely to go bearish, then where are we likely to go bearish to? And this is going to determine whether there's enough room in the opportunity for us to make profit. And this one's a little bit tricky because there are multiple levels that stand out to me, and they both have their pros and their cons, right? So when I initially started analyzing this chart, the first level that stood out to me was this zone right here, right? I'm going to take the low of this candle or the opening of this candle, this green candle, and go all the way to the wick. And for you guys that were in the workshop this weekend, remember, we talked about two parts of a candlestick. We have the body, which is the shaded in period between the open and the close. And then we have the wick, which represents the extremes, and both tell us a story. In this case, the wick tells us a very important story. It tells us that at some point, the bears were able to push price down all the way to here before getting slapped in the face and rejected. And the bulls ultimately won, but it does show us a clear sign that there was some buying pressure, there was some buying interest at that level, and therefore we should expect that again. So that's the first level that stands out to me. The second level is going to be more of a natural ebb and flow. And by ebb and flow, I mean the new structure highs and the outside returns, the extensions and the pullbacks in the market. And a great practice that I like doing, I recommend it to the traders that I teach, is just taking out your line chart and drawing on the ebbs and flows, right? Swing low to swing high, right? Draw it on, draw it on. It's great for your eyes. It's great for your RAS. It's probably a little confusing at first as you do it, but as you go on, you get more used to it. You start to see things more clearly. Speaking of clearly, we can clearly see that we have a previous outside return right here, which is also another level that I would expect price to go to. Now, what's interesting about this level is that if we look left at this level, we're going to see that not only did price pivot right here, but it pivoted here as well as we ran into previous structure resistance, and we did here as well, and we did here as well. And I bet if I look left, haha, look at that. We did, need my arrow tool here. There we go. We did here as well. So both are going to be important levels for me. So what I want to do is I want to take another box here and I want to drag out the zone between the high of this inside candle to the high of this inside candle right here and drag that out as a zone. So I've got two zones right now. And the question is, well, Keel, which zone is more important? Which zone is the market more interested in? And for me, something that is synonymous with the term interest is going to be volume. So let's drag that on next. I'm going to take my anchored volume profile tool. I have it saved to my favorite, so it's up here, but I think it's normally found somewhere in here. Haha, look at that, under the little pattern drawing tool thing with the long short stuff. Anyway, I want to take that and I want to see how much interest is there in this zone. Specifically, does one of my levels of structure stand out in comparison to my others? You can see the volume is on the chart. For you guys that are new to volume, the more it spikes out, the more interest there is at that level. The less it spikes out, the less interest there is at that level. Pretty much what I'd be looking for is high spike outs in these two zones. And we don't get any of that. So that is not very helpful. So scratching my head now, I guess I got to go back to old school analysis, the things that I learned in the very basics of my trading career, and that is going to be dragging out some Fibonacci tools. So a few things I can do here. I can start by taking my Fibonacci retracement tool, and I'm going to take it from my swing low all the way up to my swing high and see if there's any type of Fibonacci retracement levels. Well, there's a 382 where we're holding right now. No surprise, we're seeing a little bit of rejection there. And then there's nothing at the first level, but we do have a 50% here at the second level. Now, the 50% isn't technically a Fibonacci level, but it's a psychological level because as human beings, we like halves. It's very easy, right? Buy one, get half off. Ooh, I know what that means. So we enjoy it. So we have that there. Let's keep a note of that. I also want to take a Fibonacci extension from my most recent swing high up here to my swing low down here and back up and see if there's any Fibonacci levels there. So I'm going to drag it out like that. And you can see that we have a 127 sitting in that first zone. And we have a 1618 a little bit below that second zone. So that 1618 isn't going to mean much for me. The 144 doesn't mean anything for me in this case. The 127 does. So now we've got, really, if we're adding up Confluence, we have one thing at zone 1, Fibonacci extension. We have one thing at zone 2, Fibonacci retracement. Let's keep analyzing. One more thing I can do is I can bring in my equal measured move, or I can draw a line from swing high to swing low right here, and I can copy and paste this and draw an equal measured move, aka a AB equals CD pattern. So if the market is moving harmonically and it wants to move exactly the same, where would that come to? Well, looks like it's going to come down right to that second level. So now I've got two things at this second level, and if I look left, it's not too far from this even-handled number as well, the 112 even handle. So we're starting to get some ideas of what is important around these two levels. We're going to put a pause on that real quick. We're going to do it again on the lower time frame, but first I want to talk about what's happening here. So initially, as we violated our previous level of structure, we didn't really show any strong signs of bearish movement. We had the strong bearish candle right here that broke and closed below, but after that, not too much, right? For you guys that were with us during the workshop and you learned about candlestick strength, how would you classify this candlestick? It is going to be classified as a weak or neutral at best bearish candle, certainly not a strong one because of the wick to the downside. And then the candle that comes after that is going to be your classic doji candle where it's indecision. You have a long wick to the upside, you have a long wick to the downside, and the body is in the middle. And real quick, if I'm confusing anyone at the very end of this video, I'll share a link to a video I did teaching you how to read a price chart so you kind of can understand all this stuff. I'll try to maybe find two for you guys. Anyway, these aren't really positive signs. And to start today, we saw a lot of bullish action to the upside. Now, we still have about an hour and something minutes before our candles close here. So technically the trading day is still going on. But as we ended the day, we actually saw the sellers get back involved and push this down. And as we go down to a 4-hour time frame, that's going to look a lot clearer. I'm just going to get rid of this volume here. It's annoying me, right? So we saw price action pull back, right? So this would be a pullback trade. We came into a previous level of structure looking left, and then we got a very nice bearish engulfing candle, which once again is a positive sign for our bearish move. So I said I would do some more analysis to kind of get an idea of what zones that we can use. Let's bring some more of our Fibonacci tools on. Let's bring a Fibonacci extension from our most recent swing high right here to swing low right here and back up. You can see we have a 127 extension right here, and then we have a 1618 right down there. And then I'll just draw in once again an AB equals CD pattern. So an equal measure move, swing high to swing low. We'll copy and paste that and draw it down here. I drew it a little bit. Let me just tighten that up some. I drew it a little bit long there. There we go. And let's copy and paste that. Or steal it. Let's just steal it. And you'll see that's going to come right near that 127. So I'm going to give you a few options we could look at for targets. And again, I want you to do your own analysis and figure out which is going to be the best one for you. But The absolute, well, the most conservative target is going to be at a retest of the lows, right? This is what I would personally be looking for. I can tell you right now, you're not going to get a good risk reward. That's why I'm not in this trade. But if you're allowed to shoot for extensions, I would say zone 1 is going to be right here around this 127 and this AB equals CD pattern. So let's write this in. We have a 127 plus AB CD at zone 1. I would say zone 2, we have this 1618 Fibonacci extension. I thought we had another one as well. Is that the other 1618? Ah, there we go. And the 127 bigger one, right? So let's write this in for zone 2. Two areas of confluence there. You have a 127 big and a 1618 small, right in that zone. Put a little box in there. Boom. And then zone 3, that's going to be at that lower zone, right? We're going to have that AB equals CD pattern. And I thought we had one more thing, 50%. Where's that 50% Fibonacci retracement? Did I lose you? Did I lose you? Did I lose you? I might have deleted it. Sorry, guys. Hold on one second. Nope, here it is over here. There we go. That AB equals CD pattern and that 50% retracement a little bit lower at about 111.31. So here are 3 different options for you as far as targets go. Let's just draw these in real quick so you guys can see them. I'm going to erase these because, again, they're too big and annoying. Sorry, I'm moving around the charts, probably hurting your eyes a little bit. But let's take a look at this. If you were to enter on a lower low, lower close, it would be right here. We can have target 1 option, again, right down here at this 127. We can have target 2 option right down here, or I shouldn't say target 2 options. Target option number 1 at the first level, target option number 2 at the second level, and then target option number 3. And I want to be careful if I say that because you can certainly split your position up into 3s and take 1 target away at each level, a conservative one, a somewhat more aggressive one, then a super aggressive one down here, or you can hold everything for the longer one. Again, this is going to be a personal decision that you have to make. So decent target levels with all of them. The last bit of our equation is going to be the stop loss. Where do stops need to be? Well, an ATR stop is going to be right around here. Again, because I already did this and it wasn't a 1-to-1, so I couldn't get involved. A little mad here. This would be kind of the minimum stop loss I would use right above here. If you want to be more conservative, if you can afford to be more conservative, I would also get above the swing high, so a little bit higher. And again, even if with any of these risk profiles, except for maybe the first one, you got to be a little bit cautious, you should be able to have a good risk reward, but that would be the more conservative stop option here. Our next setup is going to be on the Euro Aussie, and this one was exciting because I originally looked at it for one reason, and then I noticed that it was something else that I told myself I would try to find, but I haven't been able to find one yet. So the initial look was another trend continuation trade. Again, here on the 4-hour chart, we have a higher high, higher close, a break and close above structure. We have the market losing some momentum here, and we are looking for a pullback, right back into this beautiful zone with all these tasty wicks up here, and then an extension higher. We're getting a little bit of that already, but hopefully it's just kind of a before week close type of rally. So we are looking for that, and we're looking for a move higher. Where can price go? It can go up here. Look left, structure leaves clues, right? So there is a little bit of room to go higher here. And again, we can just take off our or put on our Fibonacci extension tool from our most recent swing low to swing high. Yeah. And back down, we're going to get a 127 a little bit below that zone, a 1618 right there. We can also take a look at this from a bigger perspective. Let's take a Fibonacci extension from our swing low here to our swing high here and back down and see if there's anything up there. Oh, look at that, a 127 right in that zone as well. Now, as I looked into this a little bit closer, I said, Akil, this actually might be one of those patterns you were supposed to be looking for but haven't really found yet. And that's going to be the 5-0 pattern, right? If you guys remember recently on the YouTube channel, I did a video where we talked about the 5-0 pattern, which is a harmonic pattern that I just never really paid any attention to. We spoke about Elliott wave theory and Dow theory and how they all kind of work together. And in that kind of tutorial, I said, hey, you know what? This 5-0 pattern actually lines up with my philosophy in the market. Maybe I should look for it more. And this is going to be exactly it. So with the 5-0, we have not an X to A, it's creature of habit to say that, but we have a zero leg right up here to, a zero leg right up here to an X leg down here. This first retracement is going to be our X to A right here. This is going to be our A to B down here. And then our B to C is going to come all the way up here to a zone between the 1618 and 2.24 Fibonacci inversion from this XAAB, from this B leg, excuse me. Again, I'm getting, these are a little bit different than the other harmonic patterns I trade, to our A leg. And if I can actually draw a Fibonacci on, you're going to see that we are right at that 1618. The next move that we're looking for is going to be a retracement right back down into the 50% retracement of our swing low to swing high. So again, it's similar to like a butterfly pattern, but maybe trading in the better part of the butterfly pattern where price action violates your starting point. We get a little bit of relief, and then we expect the market to continue on its way. So it's really no different. Sorry, this should be down at the 50%. Sorry about that, guys. There we go, right down there. So it's really no different than the trade that we were looking for before we put the pattern on, right? We had a higher high, higher close that allowed us to project a continued move bullish. We're looking for a pullback, right? And then looking to trade it up. So in a sense, I don't want to say it's the exact same trade, because as a pullback trader, your zone is anywhere between right here at these lows and here. In this one, it's the same concept. You're just looking for more of a specific level to trade it at. So I thought that was pretty cool. Anyway, if you want more details on the 5-0 pattern or how to read a price chart, there should be videos that are popped up on your screen. If not, check the description link below. Hope you guys have a great weekend. And until next time, plan your trade, trade your plan. Take care.